Hello, hello.
How is everybody?
Hello.
Good morning.
Good morning. I wish it was morning.
Not come out of that now. All right, let's go back to this.
Hello.
Hello. I need to once everybody loads up, you start talking. I need to step away for 1 minute.
Okay.
All right.
Okay. Well, we don't have a quorum yet,
We're getting there.
whatever that means.
Hey, Trent, Kerry, how you guys doing today?
Good.
Good.
Hey, I had a quick question while we wait on everybody to join.
Good.
MicroStrategy. Do we think the price will go up or down based on the earnings and the call coming up?
I think it has a lot to do with the relationship to Bitcoin. We were talking about that today on the Platinum call. And if you look at a chart historically after a halving event, the Bitcoin goes sideways for a while. So I think it was, I'm trying to remember what we said when the last halving was. Bear with me here. I think it was May 11th of 2020, I think it was. And from there until October of 2020, it basically went sideways. And then it took off. And so what we were talking about on the call was we're seeing something sort of similar to that. And so, granted, things are a lot different because of the ETFs, because now institutional participation. But I think it is, I have sort of a channel between 60,000 and 73,000. And, when I look at it from a weekly standpoint, it's just basically moving within that channel. And that could continue to go on, or something big could continue to push it higher. Or the other perspective is if you look at a weekly chart of Bitcoin, you can see a cup formation, the old can slim approach that was started in November 8th of 2000, or the week of November 8th of 21, sort of peaked out. What is it? April first week in April, and now it's sort of has the last 2 weeks it's moved downward, and so that handle could be a support around 52,000 or so. So not a totally direct answer or a definitive. It's just more of what technically we're seeing happening. So, but historically, after a halving, it just goes sideways for a while. So I still like it from a long-term period. And I think just because of the supply demand element, it could, definitely can go higher. So we'll see. So
Okay. There's a few topics I wanted to share. I was very pleased to get a email. I think it was on Tuesday night from Mike, and he said, Kerry, are you aware that Microsoft has hit your buy-in price in the aftermarket? And he was right. And I bought in, I think at about, I thought I wrote it down. But anyway, that same thing happened on Supermicro computer. So pay attention to the cheat sheet. Those prices that I come up, I can remember one of you said those ridiculous prices that you share with us, that these stocks are going to come down to. Well, they hit those ridiculous prices, and I would advise you that if you look at a Meta chart, this happened again before. It happened for the same reason. Mark said he was going to make a major investment into the metaverse, and he was going to cut his staff and get skinny and mean. And there was a substantial drop. And it then bounced up, and then it went back down. And I think there will be another buying opportunity on Meta at even a lower price. I'm looking to buy again, and I've put that on the cheat sheet. I want you to be aware of something that just came to my attention. I'm from Indiana, and I was intrigued when I saw that Google was building a new data center outside of, I think it's Fort Wayne, and they're going to spend $2 billion on it. It's a ground up building, 2 billion. Sounds like a lot of money to me, but then I dug a little deeper, and I found that Amazon is also building one, and it's going to be it was, I think, 11 billion. $11 billion. A big warehouse. They say they'll employ 1,000 people. That doesn't sound like a lot of people for an $11 billion expenditure. So then I went on and I said, I dug a little deeper, and I found that Amazon, in addition to that $11 billion data center that they're building, they're projecting their CapEx. And as I understand CapEx from my understanding of balance sheets or financial statements, that's the capital expenditure that you expect to make this year for improving your business. And Amazon's CapEx expenditure is $58 billion. That's up from 27. It's more than double. So is this build out of data centers about to come to an end? No, we're just getting started. As I said, Amazon's building an $11 million one in Indiana, and Google's building a $2 billion one in Indiana. So then I said, okay, well, all right, if Amazon is increasing their CapEx from 27 to 58, and I heard Meta say that, or Mark say he was increasing his, he's going to spend $40 billion in capital expenditure this coming year. I couldn't find how much that was up from. Google is projecting a CapEx expenditure of 48 billion. Microsoft, 42 billion. That's a 66% increase in their capital expenditure. Where is this all going? It's going to Jensen Huang. It's going to Micron. It's going to probably, some of it's going to spill over into Taiwan Semiconductor. This whole build out of the internet is just starting. I did a video on Vertiv Holdings, and it'll be up tomorrow. I discovered Vertiv Holdings on July the 5th, 2023. And that's when I first bought into it for $24.50. So that's not quite a year ago. Today it's at $94.07. What does Vertiv Holdings do? Well, I just saw an interview on Squawk Box yesterday, not Squawk Box, but for my lunch hour on CNBC. And I knew what they do. They build air conditioning equipment to cool data centers. And we just learned that the big tech is spending billions of dollars. That's 40, 42, 48. That's over 100. Another, that's 140. That's 200 billion amongst those four that they're spending on data centers. That's going to go somewhere. So our challenge is to figure out where it's going and who we should buy in. I'm going to do something today that I've never done before. I put in orders for stocks that I think are opportunities and that might hit my buy-in price. I've got an order in for UCTT. UCTT is Ultra Clean. This is a company that makes chemicals that clean wafers and the machines that handle wafers in the semiconductor process. I've got an order in for Intel. Intel's crashing. And that's because people aren't happy with the CEO's progress in building his 4 new fabs, 2 in Columbus, Ohio, and I think 2 in Arizona. And so I've got an order in on that for $30.75. I've got an order in for another company, and this will be my first position, and it's CDNS, Cadence. This is a semiconductor design company. It's hard to understand how there's a company, they're architects. I go to them and say, I need a chip to do this, this, and this for my business. Can you design it for me and put it out? And so Taiwan Semiconductor or Intel or somebody can make it for me. I got a price on that of $275. And then I'm trying to buy more Micron technology. You might have seen just yesterday, Biden awarded some $1 billion of assistance so that Micron technology can build a additional fabrication center in Oregon, I believe, or and then another one in somewhere in upstate New York. Understand how is Micron different than Intel or Supermicro or NVIDIA. They make memory. NVIDIA makes process. You give it a task, the chip. On a chip, you have a 1.2 million transistors. Those million transistors make yes/no decisions. They're a processor. The problem is they can't remember what they just did. So you have to attach a memory chip to it that remembers what it did so the processor can refer back to the memory and move forward. As these NVIDIA chips get bigger and bigger and move faster and faster, they need more and more memory. So you want to own Micron. Micron is projecting, they were a nonprofit for 2023. They're showing a little bit of profit in 2024, and they're projecting a 800% increase in their profit in 2025. You want to own Micron. So those are the things that I'm buying. The other thing I think that I'm recognizing we had some conversation with Anne Marie and Pfizer about the research that I'm doing and the charts that I'm making. And I want those to continue to be available to you on the website. What I've learned and what I had hoped for is this is a plug and play. It's not. It never will be. It can't be. As I was doing my research on Vertiv, I recognized that in 2021, they had a drop in their earnings of, I think maybe 80%. And then the next year, they had an increase in their earnings of 2,565%. And as I dug deeper, I said, how could that happen? And you had to go look at their free cash flow. And what happened was they bought another company. And they went to their free cash flow and they drained it and spent another $90 billion. So that then took and did a tremendous, making it impossible to create an algorithm that shares or compares earnings per share to price and make a prediction. So as a technician, I have to recognize that and then go in and make an adjustment that gives me some ability to be more predictable. Now, what I'm doing to do that is for those of you who want to work in this framework, I've added a line. I've tracked the movement of the price of the stock. I've added a line for the actual value of the stock. Because what I want to do is then be able to make a projection by whatever engineered algorithm I create to be able to say, okay, in this year, the stock went from this price to that price. And I want to create a back test. If you understand, and Anne Marie agrees with me, you got to have a back test. And that back test will, that back test will cause these anomalies to scream out at you and say, your algorithm didn't work, and this is why it didn't work. So learn from it and put it into your future algorithms. Now, what I also learned in doing that, it's going to be very effective in pointing out to you as to when these stocks are overvalued. They outperformed what the history says they should be doing. Vertiv is in that position right now. In that, and if you look at its chart and compare it to everybody else's chart, NVIDIA's, Supermicro's, everybody else's has had a last 30-day, 60-day correction. Vertiv has not. Okay. And so, and then if you'll listen to an interview with the CEO, they scaled back their projections on earnings. So my point is, for those, and I know Bob also, Bob writes me and corrects me on my mistakes and then calls me in the morning and says, do you realize you made a mistake in there? And I spent another 45 minutes figuring it out. And you know what the mistake was, Bob? It was around Taiwan Semiconductor.
Yeah, it was from Taiwan down, I think, to Vertiv. And
right.
There was percentages for
right.
2025, 2026.
What happened is I have the price of that stock keyed to its ticker such that the price changes every 10 minutes as it changes on the stock market. But as I expanded my channel or my number of lines, I didn't lower my ticker, and it didn't have a price to relate to. And so it just picked up raw numbers. I know that makes no sense whatsoever, but it was just a stupid mistake. But it's what I'm sensing Anne Marie is identifying with this. As you do these things, you learn, and you learn more, and it's a bell curve. No, it's not a bell curve. I don't think I'll ever turn the corner. I think I will learn more and more and more. And I want to share something with you that is totally off the subject, but was such a learning experience for me last night. Did any of you watch the NFL draft? Probably not. I did. And there's a good reason I did. Because Nick Saban was one of the co-hosts of it, and he is was the coach of our Alabama team. So they're going through, I think there's 34 players that are drafted on the first day of the draft. And these 4 commentators are talking about each one of these people who come up for the draft. And all of a sudden, it's very apparent that Nick has more knowledge than any of the other 3 people. And he says, and I know you say, what the hell does this have to do with stocks? And he says, I know every one of these kids. I've been in their living rooms. These are the kids I tried to recruit for Alabama, but I didn't get. And now they are the presenters. And I thought, that's the same thing that I do with stocks. I learn as much as I can so that I can make a wise decision. So Tennessee drafts this big, burly guy. And he's an offensive tackle. And Kirk Herbstreit says, yeah, he's going to be an offensive tackle for Tennessee, and he'll do. And Nick said, no, he won't be an offensive tackle. He might be an offensive guard, but he can't be an offensive tackle. And Herb says, why? He says his arms aren't long enough. His arms, and Nick explains that a guard is almost butt to butt with the center. And then he's got probably a yard between him and the tackle. And a tackle then has 2 yards between him and the tight end. And he says this guy's arms aren't long enough to expand out to the tight end to protect that space. He's got to move in and be a guard. I don't believe there's more than, how many people know that? But what he was showing me is if you are going to build a team, or if you're going to build a stock portfolio, you have to limit the amount of stocks that you even consider. And then you've got to know everything about them. Nick knew when these kids were born. He told about, yeah, this kid was born, and in the first 3 months, this was a different kid. He weighed 14 pounds. They called him Pork Chop. As the kid grew up, he lost weight, grew into his body, and now they call him Chop. Nick knew all this. That's what we have to do as investors, particularly in this time when we're facing an opportunity that the biggest companies in the world are going to spend $200 trillion in the next 12 months to build out their data centers. And we've got to know who they're going to rely on. Who's going to do the air conditioning? Who's going to pour the concrete? Who's going to design the chip that they need? And if we know that, we're now a 1%er. And the other people we're sharing the 1% position with are Goldman Sachs and JP Morgan and the people who have 46,300 employees studying this every day. Now, they study every segment of the stock market. I just want to study what I think is the growth opportunity of the next 5 years, 10 years. Recognize also NVIDIA is king right now. The king will be dethroned because there is some teenager in a garage somewhere who knows more, who knows how to take this new chip that both Advanced Micro Devices and NVIDIA are going to be introducing and take it to the next level. The other thing that I learned from Elon Musk this week is that my cars are going to turn into income producing assets. If you didn't see that video, or if you didn't listen, if you want to be an investor and you don't listen to Tesla's earnings call, there's only one title we can put on your forehead, and that is damn fool. Damn fool. This man described a whole new world. Now, John Paul believes only lies come out of his mouth, but I think they thought the same thing of Thomas Edison and the Wright brothers. This man convinced me. I've got sitting in my garage $170,000 worth of automobiles. I bought my wife a Porsche some time back, and I own a BMW. They only cost me money. And I use my cars an average of 2 to 3 hours a day. That means I don't use them for the other 21 to 22 hours a day. And what Elon explained to me is with an autonomous automobile, as long as he can program it to open my garage door, he can put that thing to work, maybe 10 hours a day for me. And maybe he can make me $50 an hour. And I can split that with him. Now, my first take on that is, I don't want a bunch of strangers riding in my car. My car is my temple. It's me. But then he explained, we'll rate every person who ever gets in a Tesla automobile. So you can only let it be available to 5-star people. Or you can give us a list of your friends and family that you can make your car available to. So I got to thinking about that. I'm a 32-year-old woman. I have 3 children. I don't have a husband. I work in McDonald's. In the evenings, I babysit, and I have to have a car to get to work. But I'm only in that car 2 hours a day. The other 22 hours, I don't have to be in it. What if I could turn that into a money-making proposition? What if I could split with Elon 10 hours a day, $500, so I get $250 a day, times 30, times 52? My life just changed. What Elon then told me is when we aren't using it, we aren't driving it, and it is sitting in your car, it's got a massive computer in it. We're going to connect it up with a network. And so when Scott out there in Arizona wants to find out where the nicest Bojangles is in his neighborhood, he isn't going to have to bother Amazon Web Services to do that search. It'll be done by Kerry's Tesla. It'll do the search because I'm going to be renting out my compute power that I'm not using in my Tesla to Amazon, and I'll get a monthly check for it. I'll even do that. I only use this computer here 8 hours a day. It's going to turn into an income source for me. This is the world we're entering into. We say all these social programs are burying us. What if I turn her car into an income source? I turn her computer, her laptop into a computer source. Elon explained, even your phone, you could rent compute power from, except you'd use the battery up too fast. Has that ever dawned on any of you that this phone has compute power that you could lease? No. If you don't listen to that earnings call, tattoo dumbass on your forehead. So next week, I want to see how many of you have dumbass tattooed on your forehead. Okay? This is the world we are entering. And this is why Meta, Microsoft, Google, and Amazon are going to spend $200 billion in the next 12 months to get themselves in a position to take care of this changing world that we're entering into. Now, what I know, as well as I'm sitting here, the 41 of you are now one percenters. Because 99% of the people in this world don't know what I just told you. Because they have dumbass tattooed on their forehead. Okay? You are at the doorstep of the best opportunity to make money that this world has ever seen. And the beauty, not the beauty of, they don't know it. And even beyond that, they don't give a damn. All 41 of you go out this weekend and sit down at a table or at a bar and go into a speech like I'm talking to you about and watch the room clear. They don't care. Okay? So Mark's fighting a tornado, we think.
Yeah, he's been texting me. He has no internet,
Okay.
or yeah, he has no internet or electricity. He just sent me a picture of a tornado going through a neighborhood near them.
Okay.
So hopefully he'll be okay. So to be David Faber to your Jim Cramer, when does Elon deliver this?
Oh, well, okay. They cover.
Is it the same timeline
That
as the
just tells
Cybertruck?
me that just tells me he hasn't listened to the earnings call.
No, no.
Because
When
they discuss that. And as he said, the biggest holdback we have right now is state governments. State governments saying it's okay. He said, because we have the software. He said, we have 1,800,000 cars out there right now with the ability to have total autonomous driving. It's 50%, and it was a add-on of, I think, $299 a month, but we have brought it down to $99. 50% of the people who are out there have signed up for it. Now, one of the restrictions, of course, is going to be states. I think California is the leader in allowing it, and they openly admit there are a lot of problems. We've all seen the videos of the Wemos who just kind of stop in the middle of the street because they have no driver, or they get boxed in and they don't. So how long off is it? The autonomous vehicle? Probably the ability to get it done and get the regulation to make it available, 3 years.
So
The
that,
adoption rate, that's the next issue. I would not buy a Tesla because it can't drive me 500 miles without me making 2 stops of up to an hour to charge it. And I'm going through a part of the world that doesn't have charging stations. That's a different issue. Okay. But as far as convincing me that I should have a second car or even a third car in my garage that turns into a taxi that generates money for me, I'm all in now.
okay, so I guess here's the thing I look at, and this is where, where you and I differ. And that is, I don't doubt that. Number one, I don't doubt that the technology and the bandwidth will be available sometime in the future to be able to turn my autonomous car into a taxi and a revenue service and a data processing vehicle, a multi-purpose type of thing. Your biggest hurdle, like you just pointed out, or they pointed out, is government. Are they going to allow that to happen? I guess when I look at it and I go, that all these ideas of AI, artificial intelligence, and all this stuff will happen. It's a matter of when, and is now the right time to buy such a company like Tesla, who just had recalled all their Cybertrucks after all of us waiting 4 or 5 years for, who they are notorious for rushing product to market before really vetting it. So I don't doubt at all what Elon is putting out there. I'm looking at it from a standpoint of, is this a company that, yes, this is a great idea, this is a watch list company. When they turn that corner, when that government approval comes, is it then the time to start buying? And how far away is that? Is that 3 years? Is that 10 years? I guess that's the thing. And that's my concern is, I've listened to he's a great storyteller. He's a great visionary. He's got a lot, he does things, he says things and he does it, and it's great. I guess it's a question of, is now the time to consider Tesla as a part of your portfolio, or is there a better time to wait with everything that is going on? And I guess that's how I look at it. And, will I own a car in the future that is electric? I hope not. Because I just don't like them. And I've driven a number of Teslas. But I just look at it from the standpoint is, here's the concept, here's the idea. Okay, what is the timeline for that stock to benefit from that being implemented? When is that going to happen? And I don't know. I guess we'll wait and see, right?
Yeah.
So, I guess that's my David Favor argument to your Jim Cramer.
Trent, I think if I can interrupt, Trent,
Yeah,
it's kind
absolutely.
of like I look at Tesla as I'm kind of in the same boat. Like, okay, I can see the vision. I think it's wonderful, but I'm somebody that invests more like looking for Tesla, maybe 2018 or 15, somewhere in that time period where are we going to benefit? Like in that case, it would have been for the cars, right?
Right.
So I'm not, I don't believe, well, let's just say, I think I've missed the boat for where I like to invest in Tesla for the car aspect. But now where do I invest in Tesla for energy storage and the robots and whatever else that we can make money from from the subscriptions or so forth. I can believe it's coming, but when does all of that package come so it benefits me like it would have been for earlier investors for the cars in Tesla?
Yeah, and you think about Tesla and its car, the explosion in the price when it related to the car. And when did that really happen? And that came at a period of time when there was a flood of money flooding into my savings account, into my checking account. And that was because money was being sent to me via, a mailbox check from our government. As money has dried up, those checks went away. The liquidity in the global system started to decline. And so now Tesla has moved, its stock price has lost its flavor or its spice. And because nobody has the money to go out and afford, a $800 to a $1,200 car payment, and then maintain that car. And that's a very expensive car to maintain. To replace a battery is about $15,000. So I guess I look at it and I go, I believe Tesla will be one of those that will come out with something that will be probably not car related. Just as say Apple did when they went from the Macintosh and they turned their whole business around on the iPhone in 2007. And now they're making a big move to what's a subscription service with the whatchamacallit, music and movies and all that kind of thing. You see that move. I look at a Tesla and I go, when do we get over the whole hype of electric cars and the expense of it and the reality of it really? And when does Elon come in with what Kerry's talking about with, turning your car and monetizing your car, excuse me. I think we're way off. And I think it has a lot to do with where we are at in the global economy. I think Tesla's, that event is probably at least 5 years out, because there's a whole lot of infrastructure that goes with that. Yeah. What do you think?
I'm sorry, Kerry.
No.
I'm sorry, Trent. This is
No,
maybe
go
a
ahead.
different
Yeah.
topic. I'm sorry, but
No, go ahead.
not to do, because some of this also parlays into the cheat sheet, my favorite topic. Looking at Tesla and trying to measure all of its various businesses, I'll call it, or products and services it's going to offer, and when do those kind of come into play? And that this is, I'm biased. I want to make money. I don't really care to make 2 cents or $2 even, right? So whether it's Tesla or some of the other companies on Kerry's cheat sheet, I guess I'm wondering, Kerry, and maybe I'm missing the place where you're doing it. Is there a place on a weekly basis where you're literally deep diving into the cheat sheet and looking at each and every company on that to see, is it updated, and also when is the best time to invest in it?
I think that to answer your question, there's 2 parts of the cheat sheet. One is what I believe the price of the company will be in the future within 2 years. the other side is where is the price to buy in? Okay, that's on the
Yeah.
left.
Yeah, that's true.
Okay, so that's where the two of them come together. And my buy-in direction is driven by technology. If you could have access to my charts, you would see that the price that I put down for Meta that I hit on Wednesday required Meta to drop, I think it was 17%. If you saw my chart, you would see what I had done was I had the chart. I went, as Mark taught me to do, to go to its support level, draw a line, a Fibonacci retracement from the one that went back a year, and then stair step them all the way up to their highs. And those Fibonacci's converge and told me the price to buy Meta was, I think it's $427. I don't know. And so that's how I come up with that price. I did the same thing with in the same week when I bought back into Supermicro computer. I think I got that at about $692, and it's up 10% before the end of the week. That's what I'm doing there. And that's how that cheat sheet is divided. One is, what is my buy-in price? The other is, this is what I think its potential is. And I'm going to refine that even further because I realized potential price at what point? Is it next January? Is it a year from now? Is it a year and a half from now? I need to be more definitive. And I'm building that into the Excel spreadsheet where I have all my expanded numbers. And on the Excel spreadsheet, I have expanded the lines to include not only earnings per share and price, but Jim Cramer, you'll see a video Monday, I think it is. Jim Cramer told me, no, maybe I've already done, no, yeah. He told me this past Monday that I should buy Ford and GM. And his words were, I remember them very distinctly, that Mary's doing such a phenomenal job at GM that they generated $5 billion worth of free cash flow this past year. And the market cap of General Motors is only $50 billion. So if over the next 10 years, she took that $5 billion each year, she could buy the whole company back. That's why it's in my trust, my charitable trust. And I thought, I need to look into that. Since their bankruptcy in 2009, $5 billion of free cash flow is the lowest they've ever produced. In fact, it's down from 10 billion last year. And if I go and look at their revenues, General Motors, are increasing at a rate of 2.5%. What is inflation? 5. General Motors is on a death march, and Jim Cramer doesn't know it. It's in his charitable trust. And then he went on and said, and right next to it is Ford. Ford's growth in revenues is a negative 1.5. What is inflation? At least 5. if you live in a house and your income is not keeping up with inflation, you only have one thing in your future, and that's foreclosure. Or you've got to downsize, kick the kids out of the house, go buy a cheaper house, get a cheaper car, cut your expenses, and prepare for death. That's it. And both Ford and GM are on a death path. Now, if you watched my video last Monday, he did the same damn thing with Procter & Gamble. Procter & Gamble is dying. And you say, that can't be. They make my Charmin toilet paper. They make my Bounty wipes. They make all the things that I keep in my pantry. Yes, they do. But their revenues are not keeping up with inflation.
But here's the thing. Here's the thing about a company like Procter & Gamble. When you're in a environment like we're in, where consumer staples actually thrives because it's in a recessionary environment, which we're basically in, those companies do well because you have to have toilet paper, because you have to have, whatever, Bounty wipes.
So
or
what's your
whatever.
measure of doing well?
Well, it's staying. You say staying alive. No, your measure is, 10, 5 or 10x. I'm talking about a company that's a necessity company.
No, my measure is keeping up with inflation.
Well,
If
inflation's
my
really
revenues
like
not keep up
12%.
with inflation, and my cost of doing business keeps up with inflation, I'm going to go out of business. Whether I run a restaurant, a hardware store, or a toilet paper company.
But
Now you might say, yeah, but they have pricing power. Well, if they had pricing power, then their revenues would go up.
But
Well,
that's
they have a
that's a
growing
product.
TAM, total
That is a
addressable
product
market,
of
because more kids are being born and more people have to wipe their ass. Well, then their revenues would go up, but they're not. And the numbers don't lie.
But here's the thing about a company like that, and I'm not saying that's a company you should own or this, that, and the other, but that's a necessity company. That's a company who has been around and provides, probably everybody on this call has a
let me interrupt. The necessity company, I remember that. That was in 2010, wasn't it? When General Motors filed bankruptcy and the U.S. government came in and said, that's a necessity company. We've got to bail them out of bankruptcy, and we're going to cut everybody's pension, and we're going to put this whole damn thing on the working man.
Hey, do me a favor.
No, there is no such thing as a necessity company.
Call mom real quick and tell her to throw all the toilet paper out of the house. Okay? Throw it all out, and then call me tomorrow and tell me how those leaves are working for you.
They'll be replaced.
They won't be replaced. They provide, it's who wants to be in the paper products. Kimberly Clark does it. I mean, they're they do Huggies, they do that kind of thing. I think the point of this is there are companies that are necessities. You have to go get up, and go tell mom throw all the toilet paper out right now. Okay,
I'll go get somebody else's.
No.
Scott Paper right down next to you.
Just go get the sandpaper from Home Depot then. Use that instead.
No, we used to use the Sears catalog on the farm.
Well, you should go back to it. Maybe we'll go back to maybe Sears will make a run.
Trent?
Yes, ma'am.
You want to make 7x money on $10,000 in the next year. Are you going to invest in Procter & Gamble?
No, I'm not. Absolutely not.
So are we trying to make a load of money, or are we just trying to kind of balance our portfolios to keep somewhat safe?
No, absolutely not. I guess the argument for Procter & Gamble is they're not going out of business. Okay. But if you want to 7x your portfolio, number one, how you manage your portfolio is important. If you're buying, in my opinion, if you're buying into tech right now, you're not going to 7x your portfolio because the environment is now switching to a commodity-based world. What's performing well? Commodities. If you're not following the economic cycles, then you're going to get hosed. So my argument is, will Procter & Gamble have a good year? Possibly. Will it be a 7x year? Probably not. But it will be a move from tech and high beta stocks to commodity related companies. And that's, you're already seeing it. And so I guess the whole argument is, I look at it and I go, Procter & Gamble's not going out of business. They should have gone out of business years ago based on Kerry's theory of inflation. Hell, all of these companies should be gone because it's a 18% inflation rate if you do the math based on how they used to calculate inflation. You throw in the fact that your dollar today is worth 93 cents instead of $1. Now you're fighting that headwind. So is Meta making that kind of return? I mean, so far this year, what, they're up 39% or we're up 39%? Yeah. I think the point is we're in a different economic cycle than we were 12 months ago. And if you're not adjusting your positions based on that economic cycle, you're going to have a 10x negative. And you're already seeing it with a lot of these tech companies. You're seeing it with Meta. You're seeing it. I mean, when they come out and they guide and they said, it's going to get tight. We're developing this new product, this and the other. We're spending money. They're telling you we're going to lose money this next 12 months. So why hold it? Why hold it? Why not find something else that's going to go up instead and make that rotation?
So I wish we had the cheat sheet in front of us and we could use it. Sorry, I've interrupted.
No, go ahead.
Somebody else was talking. Sorry. Okay.
Yeah.
Yeah, sorry about that. So, if we had the cheat sheet in front of us, use one example of one of the bus 12 or 13, whatever companies that his cheat sheet shows, and most of the data is according to what the CEOs are saying in their earnings. If one is, and choose one, have the sheet in front of us. If it's supposed to show, or they say they're going to make, I'm going to choose a number, right? But 300% in the next 2 years. And I'm sorry, I don't have it in front of me. If it's SoundHound or APLD, whatever, do you not believe it, Trent?
What, like SoundHound?
Like I said, it'd be better to have an example in front of us because
Sure.
but one of those,
Can
or
you
use
give me-
air
let me
test.
share?
Yeah, just a second. Go ahead.
Let's pick one. Let's not pick one of the Magnificent Sevens. Okay, sorry. Get a
Yeah,
little
no,
tired of those.
so do
Well,
I.
big money now. Sorry, but which one did you want? Air test, Kerry. Use
Okay,
one of those. And Trent, tell me if the CEOs have said that they believe that they're going to actually, increase their earnings by whatever, 7x, just choose one. Do you still believe that could be true even if we're in a different cycle, like you said?
Okay, hang on.
So pick one.
No, this isn't where I want.
APLD.
I need to go here.
What did you say?
I need to go somewhere else here. There it is. Do you see my cheat sheet?
We see.
Yeah.
It's the
Future-
bus
future
futures
growth
price
projections.
projections.
Yeah, bus portfolio manager.
No, that's not it.
Okay, then,
Oh.
okay. I think what it is you're on my Excel spreadsheet, so I think I have to come out of it.
This is actually fun.
Oh, that's not where I want to go. Screen sharing, stop sharing. Okay, now I want to go back and share again. And I want to go to powertrain, not that. What's that? I don't see it here. Bus portfolio projections, that's Excel.
Yes, cheat sheet. Cheat sheet.
Yeah, Yeah, that's my Excel. I don't want Excel. I don't want E-Trade. I don't want to, maybe OBS. Um,
Sorry, why was the cheat sheet or the Excel not the right one?
because it doesn't, that's where I do my work. It's not the actual cheat sheet.
Okay,
Not where
sorry.
I upload it to. Now I don't see it. Let me go to here.
And I will tell you, I'm highly motivated. I'd like to actually invest in some of the companies that look like they might be next on the what do you want to call it, gravy train for the development of the AI. I'm gonna call it, what do you guys want to call it, AI infrastructure. And I missed out on NVIDIA, missed out on SMCI, yeah, SMCI, and now I'm kind of going, oh, I didn't miss out on Palantir. I'm looking for those next ones.
So,
Hey, Kerry or
Yeah.
Trent, have you guys done any research into implantable technologies like Neuralink and some of those other companies that do implantable technologies for humans? I mean, I know that they've just started testing Neuralink in the first person. So, I think that type of technology is only going to be developed, and also with DCs being built, everything's going to be, via that kind of high bandwidth connection between your brain and data centers, your brain and your cars, all that sort of stuff. Has anyone done that? Because there's a few companies out there still doing a lot of research and technology, R&D. But I think, this technology will kind of explode in the next, once all the infrastructure, the data centers and automation with cars and other devices, they'll probably, start to kind of blossom in the next 10 to 15 years. Has anyone done any research into those companies yet?
I have. I'm back, guys. I have the VR on. Kerry, you would be proud of me.
Hang on. Trying to
You,
figure this out.
I miss you so much. You have no idea.
Okay.
so
Sure.
could you? So that's a great question about wearables and all that.
I have it on.
So where does this wearable, this implant thing, where does it go? Like, who is the market for that?
Well,
Heidi.
apparently Heidi is.
Right there.
Guys, I am so excited. I have so much to say. I have so much to say when it comes to technology. But I think, Trent, first of all, I want to congratulate you with your spin-off show. It's amazing.
Oh, Mark and I's?
Yes, I'm so proud of you guys.
Thanks.
The other thing is, I think Mr. Kerry has been drinking his periwinkle wine because he is on it. I can't even believe that he joined the Tesla wagon. I'm like in shock. I'm in shock, Kerry. Like I'm back in the bus, and I'm like, Kerry and Tesla? No way. Because a year ago,
well, I haven't bought it yet. Don't give me too much credit. I haven't bought it yet.
Listen, a year ago, I was just thinking. I took some notes to tell you guys. A year ago, I jumped on NVIDIA because of Kerry. It was at $430. So, Mr. Kerry, remember, I had no experience in the stock. I was coming into this group with the knowledge of VR, AI, and Bitcoin. I don't know if you guys remember. So just to give you a little grasp of what has happened to me, I think some of you know that I'm legally blind. I lost my vision.
Yes.
Yes. I lost my hair also too. I got really sick this year. So that's why you guys haven't seen me in the tribe. But Bob, I'm so happy to see you. And John, I saw John there somewhere. And I'm so excited to see so many ladies. It used to be sometimes just me and Nita. Now we got a bunch of beautiful ladies in here. I'm so happy. Anyways, guys, so just to catch up a little bit, Kerry.
Yes.
I did not want to have the dumbass sign on my forehead, so I had to see the Elon. I had to see what you were talking about with Elon and Tesla.
Uh-huh.
My perspective, Carrie, and I'm so I've always been a Tesla fan, but not only did I try a Tesla, because I'm blind, I am constantly in search for the latest technology to help me be more accessible. Okay, so of course I was Team Tesla from the beginning of Tesla, but just through common sense, for me, we still don't have the infrastructure to even want to be full electric. But I've been so hyped with Tesla because it's the only car that, legally, like not legally, but that has an autopilot. So I finally got to try it. And just for those that don't know me, I also got to attend, or that don't know, I got to attend CES this year. I don't know if many of you know what CES is.
Yeah.
Okay, so it's the Consumer Electronics Show. So I got to meet so many tech people from all around the world, different sectors. Going back to Tesla, Kerry, I really think that his heart is in SpaceX. I think he only, not to say that those ideas that he's saying are not going to be implemented, but one side of me felt like he was saying things to keep the shareholders happy and intrigued, because I haven't really seen him hands-on the company. And I think his passion for Mars and SpaceX and Optimus has really taken a lot. There's no way, Kerry, that you can focus on so many different projects, and we're all human. The one thing that we have in common with Elon Musk is that we all have the same 24 hours. There's no way, I don't care what he says, that he's into all these companies. I think he has a passion really for SpaceX and the tech side of things. And it has demonstrated with what's happened with Tesla. That's just me, Mr. T. I've always been a fan of Tesla.
Right.
I still have my Prius Prime, which
Okay.
I love, half electric, half gas.
Heidi, I need to interrupt you here and
Go ahead.
because
Go ahead.
I've now, Trent, is my cheat sheet up now?
Yes, sir.
Okay. I wanted to address this as Anne Marie was asking. And let's, since we were talking about Meta, to answer your question, I come in and do I go through each one of these on a daily basis? No. As something happens, I go in and take a look at it. Meta, as you see, I now have the buy-in price of $400. I think when I bought it,
Look, there it is. Enter work order.
just recently, I think I bought it at like $390 or something like that. But then let me just show you how this relates. This is my target price. I then go and say, based on the price for the end of 2025, I believe that Meta will be at $543. And I'll take you and show you how I come up with that price. I then go into Zacks, and this is the analyst. They believe that the future price of Tesla is 514, or of Meta is 514. I look at my trading views, and I believe the high price is 534. This is what is called fair value. I do not equate that into my projected price, because what fair value is the discounted value of free cash flow. And what that does is it throws stocks like Intel way off. It throws stocks like ARM, who are new, way off. They have no meaningful free cash flow. So I do not put in that into my equation. What I then say is, on Meta, if I buy it for what it is selling today, and I sell it for what I think it's going to be, I'm going to make 19.7% on it. If I buy it on the other hand at 400 and it reaches the average of those three prices, I'll make 32% on it. Okay, so that's how that works. Now, this was the original cheat sheet. I had much more in it. I keep track of how many shares of everything I own. I felt it got confusing. I keep track of the earnings per share. That was a lot of work. I've moved all that down. And let me, as I go through these, this is a historical performance. This basically looks at each one of those stocks and says that if you had bought Apple in 1999, this is your rate of return that you would have received. In 30 years, you would, or 20 years, you would have averaged 38.95. In 10 years, you would have averaged 26.2. And in 5 years, you would have averaged 26.39. That's how that works. This then looks based on my projections, what the price of the stocks will be in 25 and 26. This is where I do my work, or this is a summation of my work. This ties into my Excel spreadsheet, which is easier to work with than Google Sheets. The formulas are more intuitive. And in here, I only show this is earnings per, or this is earnings per share. This is the percentage movement of earnings per share. This is stock price. Now on my Excel spreadsheet, I've also included revenues. I've included free cash flow and also expenditures on research and development. So let's go down here to Meta. This,
And I'm sorry, maybe, sorry to interrupt. Sorry if I'm interrupting, and maybe we need to keep going down that line of thought, but I'm kind of wondering, do you mind using, not Meta, but one of the ones that you've projected to make, 8x or 6x
Okay.
over the next 2 years? And what I'm not challenging Trent, but I would like to get his, I'm so excited by what this kind of analysis shows us to help me on deciding when to buy into a stock,
okay,
that I'd like for Trent or anybody else who says, nah, I really don't think so, or maybe they do
Okay.
believe in it. I'd like for them to kind of, give me a different perspective, I guess.
okay. This is Applied Digital. You familiar with it? It's a data center up in North Dakota. This is a long shot. This is a moonshot. How did I become aware of it? Back in July of 2023, Jensen Huang threw about 500 million at it. In the last conference he had, he named this as one of their partners. The CEO has openly said that he has access to the GPUs. He said that he was having problems getting the Infinity Band. The Infinity Band is made by a subsidiary of NVIDIA. He has since said that he now has access to the Infinity Bands. So that's why I got involved in this stock. This is showing you that their projected earnings per share will go up 40%, 7% in 2023, 323% in 24, and 19% in 25. I then, I believe, take those numbers, add them, divide them by 5, and come up with 9. I then take, there's only really 2 numbers here, and it says for every 9% that the earnings per share goes up, that the price of the stock will go up 42. Okay, I then take that, and that says that's a 495% factor. If I apply that to its current price, its next year's price is $45. That's at the 47% increase. The next year it goes up 1,400. That's at the 323. That gives me a total growth of 2,791. Do I believe that's accurate? No. But what I'm saying is, and I think what you're saying, Anne Marie, is show me a Tesla of 2014. Show me an NVIDIA of 2012, when they did not have the numbers to substantiate, but had these ridiculous growth potential. Show me an Amazon of 1999. Okay, so what I'm betting on is that there are not enough data centers. There will never be enough data centers. They will turn my car into a data center. There won't be enough. And this guy's up in North Dakota. He has 2 data centers that do not look anything like a Google or an Amazon or a Meta data center. They look like storage units lined up with servers in them. They have GPUs in them. Adjacent to them. Yeah.
Oh, I'm sorry. On your 20, I don't remember, I can't see the year that maybe you've projected 27, or 27.
Yeah.
Whatever year that is, that if we're using this model, it might grow this much by whatever year. I can't see the year up above on your screen. What I'm asking is, and I'm glad you used APLD. It's one of the ones I keep thinking I should buy more into, and I don't know when. But does Trent think that, and it's Trent or others, do they think that this is not a relatively good model to use in order to make investment decisions, to look for these kinds of, I'll call it hyper growth companies at this stage?
I think if you are looking for the companies that are going to potentially fuel what we'll see, say by 2030, okay, the earnings projection numbers are a what if this happens, then this happens. Okay.
Yeah.
It's not in stone. Do they have orders booked out this far? I don't know. But what I look at when I look at APLD is, you want to double your money? Well, yeah, you can buy it at 296, and all it has to do is go up to $6, and you doubled your money, right? Is it a company that in, say, 3 years will achieve these financials? Well, why would they achieve those financials? What is going to drive their business? And if I'm looking at it from just purely everything's wonderful and great economically, well, then possibly, if interest rates were below 3%, well, then they can boost those returns. And I look at that and I go, well, that's not the world we live in today. Today, Fed funds rate is 5.33. Chances are they're going to raise it. 10-year Treasury is going to potentially hit 8%. Their biggest challenge is staying alive, because they got to borrow money to fund their expansion, but they're borrowing it at a very high rate. And for a lot of these companies who are smaller, especially these size companies, that's not feasible. They can't and especially if you start to see, you know, the revenue drop in the companies they do business with, then they're going to feel that effect as well. We're just in an environment right now where today I look at it and go, okay, at 295 or 296, $2.96, number one, an institution can't own this stock because it's below $5. Well, most mutual funds can't own $5 companies below $5 according to their prospectus. So I just lost a big part of the buying world that could buy APLD. Now, if it breaks $5 and it can continue that trajectory higher and show earnings per share growth, margin expansion, revenue expansion, this, that, and the other, well, okay, yeah. But right now we're dealing, that's a what if. And right now what I see is this is a company who what was it, November of 2001 was at what, $40 or something, or 20 some odd dollars. And since then, all it has done is gone down. It's just gone down. I mean, you look at a chart of it on a weekly, I'm looking at a weekly chart, it is hugging its 200 period moving average. It deviates maybe 2 deviations away from it to the top, which back in, to give you an idea, back in 2000, June of 2003, it got to as high intraday of $11.58. It hasn't seen it since. So what it's telling me, especially in an environment where you just saw NVIDIA take off, and yeah, they made an investment in them, but what NVIDIA is doing with these investments into like APLD and SoundHound and this and the other is a similar format that Cisco did back in the 90s. They distributed money out to companies. Those companies bought their product. That looked like revenue to them. And it helped those companies. It's just a circle, right? They're just moving their money around. And when I look at Applied Digital, I look at SoundHound, I look at them and I go, what in the next 36 months, is it a 7X? Is it a 10X? Right now, there is not enough institutional ownership and ability to buy this stock unless you're a hedge fund. But the mutual fund world is humongous. And I mean, you think about mutual funds propel stocks higher. I remember when the Fidelity Contra Fund bought Google, and it became one of their top holdings. They had held a 5% position in it. That worked out really well for them, but it was over that threshold that they could play in. And so when I look at Applied Digital, I go, yeah, it could 7X from $2.95. That's not much of a stretch, but could it be a $40 stock? Could it see massive earnings growth in an environment today that is littered with economic headwinds? No, I don't see it. I just don't see it. What I do see is there a potential for it? Absolutely. Everything that Kerry has, talked about in his bus 12 and bus 13 stocks, I believe has potential. The question is, when does it have potential? And that is what makes a good buying or selling position. Tesla, I think it's a mid $70, $80 stock until we get out of economic conditions that we are in and heading further into. A lot of these companies are not going to perform. And so that brings back to what companies will do well. And those are necessity companies. Those are commodity companies. That's my thought.
Then I would refer you to this one, AEHR, who makes a testing unit for semiconductors.
Right.
And has no debt and is extremely depressed and showed some strength this week based on a earnings report from Texas Instruments, of all people, who said our business is coming back. And our semiconductor business, and Texas Instrument basically makes semiconductors for appliances.
Okay.
They use, so, again, I can't I would say the most highest risk company that I own is Applied Digital. It's either a rocket ship or it's a septic tank.
Mhm.
Uh,
Can
Thank
I
you.
share my chart screen real quick?
Sure, I'll go out.
Okay. Tell me when you can see this.
Yep.
Okay, so I'm looking at a weekly chart. This is
Okay.
goes back to July 2021. Okay. This is the peak of AEHR, September of 23. Since then, it is just gone, and basically it'll bump up against its 9, it'll come back down, and if you look, this orange line here is its 200 period moving average. I'm a big believer that stocks eventually will regress back to their mean, and in this case, their 200-day moving average. And what I see here is this stock has blown through this. It's, since September of last year, it has just gone south. It's had a couple, it went sideways for a bit here, went up, but continuously goes south. This is just the reality of it. Whatever it does, it tests, the chips to make sure they're not faulty, those kind of things. That's great, but that's also a supply demand thing. If we see a back off in NVIDIA's earnings when it comes to revenue or booked new sales for the coming quarter, then that tells me that company is not selling as many. Now, we'll see that in this quarter earnings. Intel indicated some slowing in their foundry business, and they did real great in their PC and desktop business. But when it came to the other side of their business, they didn't do well. Is Intel a leading indicator to what AMD and NVIDIA is going to tell us? Maybe so. If they do come back and say we are seeing a slowing in growth in chip demand, AEHR is going to reap the repercussions of that. And if I'm looking at this stock today, it's going down. How far will it go down? Probably maybe not so much further, but it will eventually revert back to its 200, which is at 1638. So you can make some money there. But what has to happen for this stock to get back to $55? That means a massive demand for what they do from companies like the 3 chip makers, a massive demand. And that means then the people who are buying their computing the Amazons, the Googles, the Microsofts, whoever buys NVIDIA products, has to have a massive demand along with that. So where does that demand come from? That comes from you and I. And my question is, I don't see that demand. I see that demand slowing in a rapid way. And I see a company like AEHR reaping the unfortunate repercussions of a slowing demand for chips. And that's, at this point, I look at it and I go, AEHR is where it was when it broke out in September of 21. And all that money that was pumped in the system from 2020 is now been bleeding out of the system. And until they lower rates and they make money cheap for corporations to expand and grow, this is not a 7X stock to me.
Okay, you ask a very, I think, pertinent question. What is going to create the demand for their products? And
Cheap
that
money.
is a increase in the demand for semiconductors. Well,
Correct.
what is going to increase the demand for semiconductors? When my phone will not handle artificial intelligence.
Right.
the ability for me to reap the benefits from artificial intelligence. Is that in my future? Most definitely. When my refrigerator cannot order more yogurt from the grocery store,
That's-
because
You're
it
talking
doesn't,
you're talking a
please,
first world problem.
please, I allowed you to speak.
Yeah, go ahead. Go ahead. Sorry.
Okay. When I demand that I want more from my devices, whether it be my microwave, my toaster, my computer, my car, I believe I'm that close to this. And I believe that I will get there after Google, Amazon, Meta, and Microsoft spend their $200 billion this year to create the data centers that can deliver the AI that I want. Listen to what Mark said. He said, our AI is being taken up.
Did he freeze?
Looks like it.
Okay. Hey, Kerry.
Very
So-
rapidly.
Here we go.
What is it? What is its AI? What is Meta's AI? I don't know, but I looked into it and I do now. Meta's AI is to deliver better advertising to me over Facebook, over Instagram. It is their ability to know more about me, to take more of the data that is out there in the world to say, you need to stop putting Ken Fisher's ads in front of Kerry on Facebook because he's never going to contract with them. You need to be putting the next electric BMW car on his website. When Facebook uses their AI to deliver me a better service so that I use Facebook more and I get upgrade my phone, that is when AEHR's stock will take off. When
Okay, so-
my refrigerator can order my yogurt, that's when AEHR will take. That won't happen until these big tech companies spend their $200 billion on Jensen's GPUs.
I'm trying to connect the dots here. Trent, I would use your charts to decide on the buy-in price at, at that point in time, or when I want to buy in. But I would use Kerry's cheat sheet to indicate which companies to watch out for and approximately when to really start honing in on buying in. And so, Kerry, if we trust Ish, the CEO of AEHR, what does he say about when that demand is going to increase? Is that this year or is it next year? He gave you, again,
Yeah.
like you said, if you listen to the earnings call and if the CEOs are held somewhat accountable to what they're saying, which I believe they are, right? Then if you don't mind going back to your AEHR, what does it show us on when we should start looking
He
at
said, his words were second half of the year. Second half of the year.
What's a
I just got
CEO's
a
job?
confirmation of that from Texas Instruments earnings call.
Right.
He said next quarter. Okay.
Okay.
So if I listen to enough of these people and hear them say, the words I heard were, they are working off of their inventory now. And that's why we're not getting orders. But they have worked down their inventory and we anticipate new orders in the second half of this year.
Do they
So-
have new orders for the second half of this year, or they anticipate?
AEHR has said is even last quarter, we have had orders, but they have delayed the delivery of them.
So can I jump in, Trent, while you're thinking about that thought, what you're gonna say next, and say, I want to kind of tag in on what I'm hearing Anne Marie ask, and it may not be what she's asking, but this is what my question is. I think I'm hearing a difference between fundamental investing and technical investing. And what I'm trying to rationalize in my mind is, so where do I fit in this? Because I'm not a technical investor yet. I'm trying to learn the ropes. I understand what Kerry says because that's easy, right? Easy in the sense that he's doing a lot of the work and it makes sense. But what you're saying is that's the numbers. In some cases, the numbers don't lie, but there's a lot of variables in there too. So as a investor, wherever you want to place me, how do you make sense of what you guys are saying? Or where do you find that middle ground or that way of going about balancing out investments?
Hang asked that exact question on the Platinum Call today. And I do believe in fundamentals. I do believe if you're a company who is a continuous rate of change of earnings, growth year over year, you see revenue growth, you see development, you see free cash flow expansion, this, that, and the other. Those are fundamentals. That low debt ratio to to your income. Those are things to me I look at and I go, okay, that is a fundamental foundation that you should look at a company. So doing what Kerry is doing and looking at what I don't like is the projected, here's what we think we're going to do. I want to see what they're going to do. I want to see how all these other variables are going to affect them. I want to look at the numbers and I want to look at the rate of change from a quarter to quarter, year over year in comparison to so on and so forth, and just go look at all that. And once I've done that and I come to a conclusion of this is a good company, this fits into this demand, AER, HR maybe, fit into the demand of testing chips and this and the other, then I go to the charts and I look at it and I go, what's the world that buys and sells stocks every day think of this stock? And the answer is it doesn't think much of it right now. Will that change? Absolutely, it could change. We've seen that. But I look at this and I would say start with your fundamentals. Start with your thesis. Kerry's thesis is AI is going to change the world, and we're going to need everything to support that. Everything from the companies who come up with the idea, the software, the chips, the infrastructure, the buildings, the concrete, and how you cool them and upgrade them. That's his silo. That's what he's working in. And then I look at it and I go, well, what's the institutions of the world? What is 85% of all the trades made today thinking of AEHR? And right now they are telling me this is a no-go. Not yet.
Where is the chart? I'm sorry, which software shows that where you actually can see like right now, a lot of Palantir investors are getting fooled because, retail, because they're being told, oh, this, that, and another, but in fact, percentage of institutional buyers is going up.
Mm-hmm.
So I guess what I'd like to do is see, that's what I'm thinking is I'd love to look at, by industry, what's happening at the highest level, build out Kerry's spreadsheet, cheat sheet with all that detail, look at your trend, the what do you want to call that? I'll call it the moving day average chart, whatever you want to call it. Sorry.
Yeah.
And then as I don't know if it'll be final, but really as a reassurance, I wouldn't go and buy a large amount of any stock until I see, are the institutions buying it or not? And the thing is that I have, I'm trying to so that's when I would then make the decision to go ahead and buy or when to buy. But I'm following you on the institution buying. But you might even see a little creep up of institution buying. So maybe it's good to buy then.
Mm-hmm.
And this is not AI, but I continue to see, I happen to have, I happened upon a fair amount of, believe it or not, Canadian microcap stocks in both infrastructure, AI, and several different industries. And institutions are buying into those when they are
Mhm.
30 cents, 70 cents, a
So,
dollar.
so is Vanguard buying them?
I don't remember exactly which ones.
Yeah. So I'm asking
It's
that
definitely
question.
institution, though. I don't
Well,
remember the name, but they are institution.
you think about how does Apple, Intel, in their heyday, how did they go through the roof in the 90s? And it was because every large cap growth fund bought them. And those are the companies those companies move stocks. A $16 billion hedge fund moves those stocks. So you have to figure out who is buying that stock. If it's a family office or a hedge fund buying a microcap, that's built into their model. Okay, is it enough? What is their intent of it? Is it a time frame of a week? Is it time frame a 3-year time frame like a private equity firm would be? You just have to figure that out. And I guess that's, to me, yeah, that would be great information to be able to look at what's the institutional ownership of APLD. That could give you a whole lot of ideas of when that stock could make a move higher.
Yeah, exactly.
Yeah.
Yeah, like Kraken Robotics is getting a huge amount of institutional ownership. I know a number of other ones, and these are under a dollar or under per share.
Yeah.
So and those are some of my stocks that are doing really well right now that we here on the AI sheet are not tracking, right? They're just kind of going unnoticed. And I mean, I like Kerry's idea. You've got to follow an industry, and this is where big bucks are being made. But there's actually some other areas right now that are absolutely skyrocketing, and they are getting institutional ownership down at these microcap levels too. But
Yeah.
okay, I'm sorry, that took me down, but I like all of that decision making trend, but I like it all. I want to look at all. It's almost a step by step process, 4 major steps and charts for decision making. But I wouldn't want to wait until I know that institutions are already in it at a certain level, because then me as a retail buyer, I get it at $30 because now we know Vanguard is in it. But what if there was something where I could have precipitated that, and that would require Kerry's sheet to even get me thinking about it and tracking it, right? When it's $10 or $5.
So I guess it really comes down to you as an investor from a risk perspective, how you allocate to a company like that. How if you buy a company like you're talking about, Kraken Robotics, under $1, that is that's a very much a micro type of investor. The challenge is Kerry's one person, I'm one person, Mark is one person. We all have our own beliefs. Down the road, what do we see? I would love to see that somebody is focused on agriculture. I would be interested that at some point somebody is into commodities, and we could provide, we could contribute to that. Our biggest challenge, and this was the conversation that Kerry and I had on Monday, was that after the excitement between you and the other gentleman,
Yeah.
there were 3 people right now. It's an infrastructure element. How do we take your information, micro stocks, let's just throw that out there, and let's say you're interested in this, and we can create a model where you can enter the information. We can have that discussion every Friday. It's a matter of building it out. It's, and building out on our side. And then there's always something attached to that when people contribute. So that is the slowness that that is the challenge that we're having. But yeah, I like your idea. I think if we could, as we tweak the cheat sheet, that it can then be applied to any industry in any sector. To me, that's ultimately where I want it to be. So
Yeah. Let's see. Quick question. Sorry, everybody. The original bus companies, Kerry? It's been a little while now. How did you come up with those original companies? And I'm wondering how and if any new ones come on board or can come on board. Like I've got one that I'm dying to take a look at that's only about $1 a share. So I'm just kind of wondering, how do these actually, do you add new ones, and how do you come up with those, Kerry?
Let me give you the evolution. It started in that I went and created a spreadsheet from 1999 through, I think it started roughly in 2000. And I said, I need to understand the growth of Apple. And so what was the share price and the change in price from 1999 through 2020? And what I discovered was that it averaged growth of 31% over the period of time. So I said, okay, what about Microsoft? And I did the same kind of research, and I found they did about 26% average over the 20 years. And I just started adding companies. And looking, and my criteria is I won't put any company in there that hasn't averaged 25% annual return since either 1999 or its inception. And that started bringing even companies like Broadcom. Broadcom's an interesting company in that, and then what I did on that sheet is show that some years they had tremendous gains, and then they had losses, and then some years every one of them had a loss. And so I realized it's not only how many phones they sell and how many contracts Microsoft, it has something to do with underlying events as well, such as a dot-com bubble, such as a subprime crisis. And so what that then said to me is, okay, I can live with a bad year because I know historically it will all come. So I built that was the original bus. And then as we got into late November of 2022, and I started hearing about AI, I realized that AI was going to change every one of those companies. And I had to go and find any additional large tech companies and understand what they did. At that point, I didn't know what Broadcom did. I did not know what a foundry was. I did not know what a wafer was. I knew the word semiconductor, but I had to ask my phone, what's the difference between a CPU and a GPU? What's the difference between production and memory? How do they interrelate with each other? What is a semiconductor architect? I didn't know what any of those things were. And so then I said, okay, big tech, semiconductor architectures, they're all related. They go into the bus 13. Benny used to be here. Why did you choose bus 13? Because bus. And so I thought it would draw attention. And so when I said in my videos, just get on the bus. It's bus 13. Marketing, okay? Then I realized once this bus 13 thing gets done and delivers us AI, there's going to be a whole nother element of delivering it to me. I did not see that AEHR is going to deliver it to me. So it's software. And so I started looking at Salesforce, Snow, SNOW. Someone said, well, it's going to involve cybersecurity because this is going, and so bus 12 started coming. And then that other bus that I really don't have a name for is just my moonshots. That sits down there in the bottom, and that's where Soundhound sits, and that's where AE Applied Digital sits. These are moonshots. I have Twist down there. Why did I get involved in Twist? Because Twist is a strange company. We build our semiconductors right now out of silicone, and we put transistors on top of that silicone. Twist puts DNA on top of that silicone because DNA can hold billions or more of cells than a transistor can. Elon, in his speech, talks about, I think he says we have 30 billion cells in our body, and they all interact with each other. And as our body grew from something that crawled out of the ocean, we dispensed of some of those cells. And that was how he is explaining why he's getting rid of some employees. Because the cell of Tesla is growing, and we have to get rid of what we're not going to need in the future. The man's a genius. But that's how the bus 12 and the bus 13 evolved. And I guess the other thing that I have learned is I'm only one person, and I cannot be diverted. I get emails saying, look into this stock. Go do a Kerry. Go do a deep dive on this stock. What's a deep dive involve? At least 8 hours. At least 8 hours. And if you give it any less, you can tattoo damn fool on your forehead. That's why Goldman Sachs has 43,600 or 46,300 employees, because they cover the whole spectrum.
How are you getting new ones onto the buses, I'll call it?
Am I
right
getting new
now?
ones?
Yeah, like what's your filtering process?
I entered UCTT. I use a Microtrends. It is a search. I go to it at least once a week, and I ask it consumer technology, U.S. stocks, market cap of at least 1 million, short-term performance. What companies have given the greatest short-term performance, and that's usually 6 months. And that's how I found Virtua VR, Virtua Systems.
Okay.
And so I entered. Then I have entered. There's Skyworks or something like that. There's too many of them for me to remember. So that's how I add them to them. But for the most part, it is my belief that you aren't going to replace NVIDIA. You aren't going to. Well, that's where I discovered Supermicro. Was on Microtrends, and that was no more than a year ago.
Okay.
And it was
So
it's a 30-year-old stock that went nowhere. And again, know what you own. They're both NVIDIA and Supermicro, both owned by CEO'd by Taiwanese born people who are close friends and are working together to make each other successful. This is something you really need to understand about Jensen Huang. you need to know who he introduced in his only one CEO did he introduce in his keynote speech. Did he turn the lights up and put the spotlight on him? Only one. And if you don't know who it is, tattoo,
That tattoo is right here because I don't.
Michael Dell. Why did he introduce Michael Dell? Because he knows Charles can't keep up with him. That Super Macro cannot keep up with the demand for servers that Meta, Microsoft, Google, and Amazon are going to spend $200 billion on in the next 12 months. Super Macro can't keep up with it. They've already built 3 new plants. They can't keep up with the demand. Michael Dell's going to fill it.
All right, we got to
Dell-
let other people ask questions.
Dell will find its way onto the bus.
Heidi,
Heidi, are you still there? And Michael was here and he's gone. Okay. Heidi's gone to get a glass of wine.
this has been great.
Yeah, I think
Yeah.
individual participation. Anne Marie, I want to send kudos out to you for challenging Trent and I to defend our positions, because that's how I learn, and that's how you all will learn. I hope you see this as something comparable to your. I would challenge Harvard's business class.
We probably have similar debates.
Do you think so? Okay. Hello, Brian. Okay.
So my mission right now is I need to deliver a automated version of the cheat sheet to Kerry.
Yeah.
Hopefully by Friday, or not by Friday, Sunday. Sorry. I'm getting, so hopefully we'll have that next Friday. We're not having the platinum call. So if you're a platinum member, we're not having a platinum call on Friday because Mark is going to Berkshire Hathaway meeting.
Oh.
And I'm helping my wife set up for a art festival on Friday morning. So we won't have that, just to let you all know. And we'll still plan to have this call at 3:00 on Friday next week. What else? Anybody got anything else?
I got a question for Brian. Brian, did you watch the draft last night?
I did.
I knew there was one guy who would be. Did Nick Saban, did you watch the Saturday night or the Saturday morning team?
I did. Nick Saban, yes, I did.
Did he steal the show or what?
Oh yeah, he was very, very entertaining and analytical at the same time.
He would be a tremendous stock picker.
Yeah, definitely. And one of his linemen will be a Tennessee Titan.
Okay.
So I look forward to that.
Okay.
Even though we got rid of Derrick Henry, I don't know why we didn't re-sign him, but it is what it is.
Well, he's got to be in his mid-30s.
Yeah, he's up.
But he's a tank. Tank. Okay. All right. I knew you'd be there. I said to Danita, I had no anticipation about how entertaining this would be, and learned how the NFL worked. All those people focused on, and it's like Nick said, if you don't have a quarterback, you might as well not come to the games.
Yeah.
That was very.
He's gonna be doing the Saturday shows during the season as well. So
do you think that Lee Corso will be on?
I don't know. I guess it's based on his health.
Yeah.
His health
and
situation.
who's that guy who always took his shirt off? He was a place kicker. Who is
McAfee? Pat McAfee.
Is he coming back?
Yeah. As far as I know, they're all coming back. They're just adding.
Okay.
Sagan.
Okay.
Yeah.
Excuse me, folks, but Brian and I have a common interest. All right. Have a wonderful weekend.
Thank you
Thank
all.
you.
Take
Bye-bye.
care. Bye.